It's Friday Coffee with your mortgage man, Eric, and today we're going to talk about FHA. So I had a follower, subscriber to the show that reached out and said, "Hey, Eric, can you do some deep dives? Give me some more information on FHA." And I thought it was a great topic because I've had some weird questions lately regarding FHA, such as I had this one come up a number of times in the last couple of months. Eric, what is the credit score you need for FHA? And there just isn't any. The answer to that is it depends. And that kind of seems like it's a, kind of dodging the bullet question, but in reality, that is the truth. And let me explain what that means is that technically, you can go down to a 580 credit score with an FHA loan. How many of those do you see? Very, very little, right? When you're in the 500s with credit score, you've done some things to your credit that are probably going to prevent you from getting a home loan. Now, not all the time, but the vast majority of the time. So if I try to, rein that in on a credit score range, I would say, you probably need to aim for a 620 to a 660 credit score to get an FHA loan. Now, what happens is when we take all of your information through a loan application, we pull credit and your rent and your asset statements and balances and time on the job and how much you make and your debt versus income ratios. All those things are entered. We hit some buttons, kind of dumbing it down, but we run what is referred to as the automated underwriting system. The automated underwriting system is made up of all these algorithms, and it's going to tell us, give us a result of approved or referred. Referred just means denied. And if you're approved, that's great, right? If you're referred, there's a chance for a manual underwrite. Now, hold on to that for a moment. Now, in our industry, not every bank or every lender can run these automated underwriting findings. The system immediately out of the gate, while we either have you on the phone or within a few hours after we've got done talking to you. Big banks like say a Wells Fargo, a B of A, it could take 2 weeks before they get to this point where they actually pull the AUS, the automated underwriting system, which is kind of shady, if you will. Nonetheless, back to the automated underwriting system, the credit score requirements. Let me give you an example. So let's say you had a 605 credit score, but you had $30-some thousand in your 401k through work. We'll probably get you approved. We will probably get an automated approval. Let's say you had a 658 and you have really no money to your name. You may not get an approval. If you've got a 700 credit score, and again, you have no money to your name, we'll probably get you the approval. If you've got a 605 score and you don't have very much assets to you, you're not going to get the approval. And the algorithms are going to determine that when we hit the buttons and run you on the automated system. Now, here's another question I hear often is first-time homebuyer programs. Is an FHA for a first-time homebuyer program? The answer is no. There is no such thing as first-time homebuyer programs anymore. I know some people still use the terminology, but that term has really not been applicable for, since before I got into the industry over 20 years ago, for FHA, that is. First-time homebuyer really means you haven't owned a home in the last 36 months. And FHA doesn't apply to that. Example, you can buy a home today using FHA, sell it a year later, buy your very next home 2 months after that using an FHA loan. So you can use it over and over and over. It is not just for first-time home buyers. Do a lot of first-time home buyers utilize FHA? Sure. Why? Because it's lenient. You only need 3.5% down payment. You can get gifts from relatives. You can get down payment assistance programs with it. We're going to get into that in a moment. And you can have some bruised credit along the way, and they're going to overlook some of those things, and you can still get into a home. So, I'd say a lot of first-time home buyers use the FHA to get into their first home loan. So maybe that's why it still kind of sticks today, first-time home buyer program, but it's not technically. Now, How to use this? How does it work with down payment assistance program? Down payment assistance programs are tricky. They're not just for FHA, but let's just talk about the FHA portion of it today. First off, you need at least a 640 credit score. So if you're below 640, you're not eligible for down payment assistance. It is what it is. I don't write those guidelines. But let's say that you are eligible for the down payment assistance. We can get you the down payment assistance. When we run the automated underwriting system with down payment assistance, it adds risk associated to your file, just how it works. So you may again not get the automated approval. What happens if you don't get that? We can do what is referred to as a manual underwrite. What is a manual underwrite? A manual underwrite is where we say, hey, look, I know the automated system doesn't like your file, it denies you, but we can override that with what is referred to as compensating factors. Now, what are compensating factors, right? Like I said, this is a kind of a deep dive FHA. Compensating factors are reserves. That's one of them. That's one of the biggest ones. If you are at a 47% debt versus income ratio on the back end, what they refer to the back end, which is all your debt, which a lot of buyers are in that range because it's expensive to buy a home in Phoenix, Arizona. So with a car payment, a couple credit cards, put your house payment in there, you're in the 40s, close to 50, if not going over 50 in the house you'd like to buy. Happens all the time. So reserves are 3 months. Well, what's reserves? Reserves are whatever your housing payment's going to be. Let's just call it $1,500 to keep the numbers even. You would need $4,500 in reserves. What does that mean? That means you need $4,500 sitting somewhere in your account after we're done and wrap this up with the down payment and the closing cost, right? That's not easy to handle. So how many home buyers out there that are struggling to get a down payment, trying to use down payment assistance, and they've just got $4,500 left over just sitting there, right? It doesn't happen that often. So you have to keep the debt versus income ratios under 47. And what does that do? Well, then that reduces your purchasing power. So now you got to tell the buyer, say, hey, I know you wanted 325, but I can only get you 290. So now you're trying to find a 290 property in Phoenix, which is not easy. Doable, but certainly not as easier as it would be with 325, right? So, and then when you go to over 47 to 50%, now you need two forms of compensating factors. A residual income factor, which is a table that's typically used for VA loans, or residual income, or trailing income, say from a spouse that's not on the loan, but you could prove she has a job, or your housing payment has not gone up 5%. Really, 5%? So that would mean your mortgage payment's going to be similar or identical to what your rent payment was. That I haven't seen that happen in 10 years plus. So the reality of it comes down to you're going to need some reserves to get into the compensating factors to overturn a denial on the automated underwriting system. Again, it's not easy to do, to get those reserves, right? So keep that in mind. Now, some misnomers out there. We've seen flyers out there. We can go down to 540 or 525 on an FHA loan. That's just ridiculous. It's silly. It's false advertisements. Once you get down below a 580 credit score, you now need a 10% down payment for FHA. Well, who's got 10%? I mean, I'm doing FHA because the situation I'm in life, I can't really afford a down payment, but right, so you follow me there. So be careful on some of the advertisements and the ringers with some of those flyers that you may see out there. The reality of it is you can use FHA over and over again. It's more lenient on their guidelines, and like I said, you can have bruised credit. You want to really aim for the 640 because 640 gets you into a range that you could be eligible for down payment assistance. Now, as I was stating earlier, down payment assistance is going to be hard for you to win an offer on. So if there's a multiple bid offer on the home you like, usually the first offers that get thrown to the side are down payment assistance. I don't agree with it. It's not fair, but it is what it is. If you were the seller, you would want the most stable and sound offer, right? So you don't have to revisit this over in fear of something falling out of escrow. That's just the normalcy of buying and selling homes. Now, if you're in an area that doesn't have multiple bid offers, you can probably get away with using down payment assistance programs. And I would say usually that 640 mark is where you're going to start getting an automated approval, and you don't have to worry about compensating factors and keeping your debt versus income ratio lower type of thing. So aim for the 640, 660. It's a great place to be. Again, doesn't mean that you can't get a home if you got a 595 or a 604 or 612 credit score. The best thing that you can do is talk to a lender. I know that it seems that a lot of prospects out there have some issues going to a lender first. They'll go to their real estate agent, and the agent's like, well, you need to talk to a lender. And I don't understand all of those reasons. The best thing you can do is get hooked up with a lending professional, not a glorified paper pusher, a cubicle worker at Quickens. Talk with someone that actually knows how to navigate through all of that, right? Compensating factors and down payment assistance programs and debt versus income ratios, and determine whether you're on the right path and what all your options may be. With that said, it's Friday Coffee with your mortgage man, Eric, 602-757-2171. We'll see you.